Okay, good morning, everyone, and welcome to another episode of the Crypto Hour. Today it's Friday, the 24th of April, something that we were discussing last week has actually played out in the market. So we'll go and have a look at that in a second. But from first of all, we always start from the geopolitical situation. So at the moment, everything is being dominated by still, the Middle East situation, which it still has quite a high level of uncertainty. So so everything can change pretty quickly depending on the development on the Middle East. Apart from the political situation, the other thing that's starting to play out at the moment is the effect of the Middle East, the Iran war on the economy. Okay, and the main effect right now is that prices are going up, as you all noticed. So there is like inflation is raising its ugly head again, down to obviously most obvious is oil and energy have increased dramatically. Every time you go and fill up your car, you notice how much it has gone up over the past few months. And this is obviously in certain countries more than others, but pretty much the whole world has been affected by that. So let me go and share and have a look at some of the things to have a look at. So we start with the economic calendar. Okay. So as you can see, the economic calendar, generally we look at the red file to say the most important economic announcements of the week. As you can see, this week, the same as last week, there isn't a lot on the calendar. Okay, so we had mainly we had inflation figures, let's say from Canada. It actually, funny enough, it was almost double what it was the month before, but lower than expected, lower than the forecast. We had retail sales in the US, which are still quite buoyant, higher than expectation. And CPI in the UK again going well above 3%. So that has an effect on the decisions to raise or lower interest rates. Now, there have been different approaches. Some countries are saying that there's still strong inflationary pressures, and some countries have recognized that the inflationary pressures are not down to consumer behavior, but that's down to producer increased costs, like increased oil costs. But as an effect, is that both in countries like the US has said that probably there won't be any interest rate cuts until these third or fourth quarter this year, which is not what the market was expecting, and had an effect also on not just on the stock market, but also on gold and silver and precious metals, because obviously, if the interest rates are higher, it costs more to hold precious metal in terms of opportunity cost. Then yesterday we had some manufacturing figures, nothing really to worry too much about. And this morning we had retail sales for the UK again, just being slightly positive, going from negative last month to positive this month. But again, nothing major. Going forward to next week, we start the rates announcements dance, so to speak. So on Tuesday we had the yen that announces the central bank rate that's expected to stay the same at 0.75%. Inflation figures for you guys in Australia, and then we had on Wednesday quite a heavy day with both Canadian dollar and announcement of the rates, and then the US at a few hours later. With also, what's important is that apart from the rates themselves, there's also the statement, kind of like the intention of the central bank and what they're going to do going forward. Now, the US situation is slightly different because in May, we are expected to change of the governor of the Fed, which the current one will stop. Will step down, and the new one will be announced. Now, obviously, the current administration, President Trump, has been very vocal, on the side of wanting to lower interest rates, and but the Fed is independent. Okay, so the current chairman has always refused to oblige. He was thinking, well, he doesn't respond to the political will. His role is above the parts, and it just is his obligation as towards inflation and the labor, to keep the labor market working well while at the same time controlling inflation. But there might be a lot of pressure to the new governor, the new head of the Fed, to be a lot more dovish, a lot more accommodating towards lower interest rates. So we'll see that, although there's going to be a statement of the current monetary committee, that may change a month down the line, because then the new chairman will be in place. On Thursday, we also have the UK and Euro announcing rates. So we have Japan, Canada, the US, the pound, and the euro. All those at the same time. While on Thursday, we also have the PCE price index in the US, which is the main measure of inflation that the Fed uses to set interest rates. So where there wasn't much of the last 2 weeks, it seems that all the announcements are actually bunched up into next week. So be careful. You're taking any sorts of financial decisions, whether you are trading, whether you are buying for your portfolio. So there could be quite a few ups and downs next week, following both announcements and statements that are going to be put forward. Let's have a look if there are any interesting news onto the labor market that was announced yesterday. Sorry, not going too much forward. Forward. So again, nothing really worth a note. We're still hovering about the 1.10 million of long-term unemployed, which we have been over for at least for the past year or so. So no particular pressure into joblessness, although part of this is structural, because a lot of people are being sent back. So the labor market has become smaller than what it was when this administration came into power. So you would have expected this number to improve. Instead, it stayed pretty much the same. Okay, so basically we can assume that the real underlying job market health is not as good as it looks by looking at these numbers. Now let's go and have a look at our friends Bitcoin and see what it did last week. So we go on to daily chart Bitcoin. Okay, so if you remembered where we were, so today is Friday, 1 2 3 4 5 6 7. So this is where we were last week. Okay, and what we're discussing is this particular point over here. Okay, so we were discussing, is this the initial recovery or not? And there are a couple of things that I noted when we were here last week, okay? So I told you, first of all, we're waiting for a closing a week above this point. Why was that important? Because it shows that the market has, trusts that the prices are then moving higher, and because there was a strong resistance, which was the previous. You can see there's a couple of points here. This area that was fairly important. Okay, this area was fairly important where so it's where the market stopped in March of 2024, and then again when price came down from the all-time high, it stopped again there in April 2025, and then as it went down, it was offering resistance around the $74,000 level. So again, as price started recovering, it stopped exactly there at 74,000. So these levels are, we make a note. They are important inflection points where people that were bearish about Bitcoin were confident that that would offer resistance for prices to carry on being lower. But you see what happened here. When price tested this point and went back down, it didn't go as down as before. So it didn't have enough strength to break and create a new low. Instead, price came back up and actually broke this point, tested that point again down here, again without having enough strength to create a new low, and now we've actually broken through. Okay, so on this day here, we closed the week above this point, which is significant because it shows the market conviction that this is not relevant anymore. We can take that off the chart. Okay, it's not that important anymore. So, and what did I say as well? That if we close above this point on a Friday, the market will come down and tap the demand area, the first demand area that it finds below, and then move higher, which is exactly what happened here. So the market went down on between Sunday and Monday to that point, and now we have moved almost testing the other area, which is the one that I am looking at, which is the one that I really want to see broken. If we are to actually consider this whole down move terminated. Okay, because at the moment closing below this point will mean that the down move continues and it's got extra strength to carry on going even lower. This is the inflection point for me. So again, I would like to see a weekly close above this point, which is about 79,000 and a half. At least a daily close. At the moment, we just touched it. The interesting thing to see that we have touched it, but there hasn't been a strong pullback. Okay, so there is still enough momentum in the price for price to retrace from 79.5 to 77, but without any momentum on the downside. Okay, and the other interesting thing, so this is the first part that I wanted to part of the news that I wanted to share with you. Talks about the Bitcoin miners. So a lot of the Bitcoin miners have been selling Bitcoin, like Riot, Marathon, and other smaller providers, not because they want to sell Bitcoin or because they think it's too high, simply because they have to finance their operations. Okay, because that's the way they make money, is that they earn in Bitcoin, and at some stage they have to sell Bitcoin to fund their operation. Now, at the moment, the numbers are not great for miners, so they have to sell some Bitcoin. And this is like, in a way, the 4-year cycle has been working because of that, because of the miners. Okay, so every 4 years, the rewards that go to the miners get halved. This is what we call the halving event. The last one was at the end of April of 2024. Okay, so what it goes is that the miners then receive less rewards. So in a way, they have to sell off their reserves, until they start they finish their reserves and price starts pulling up again, and then they earn more from their efforts until there's another halving event. The next one is going to be in another 2 years, in 2028. So even, and I'll go back to that. So this is even more impressive that Bitcoin has done this in April, so from the end of March, while the miners were selling. Okay, so the miners were selling. There was buying pressure coming through, and a little bit of, I wouldn't call this price movement FOMO, but there is some retail pressure that's coming back in. So we see now, how do we see that? We can have a look at the for example, at the ETFs. If you look at the crypto ETFs in general, can you see from this chart how, sometimes it's green, sometimes it's red, but over the past couple of weeks, the green has dominated. And at the last week, 1, 2, 3, 4, 5, 6, 7, 8 days of continuous positive inflows. So money coming back into crypto. Okay, we can see crypto ETF flow performance. Last week, about $1 billion. Last month, about almost 2.5. Okay, so, and we can see at the moment, these are the ones that are being tracked: Bitcoin, Ethereum, XRP, and Solana. Okay, so we can see the top ETFs. So IBIT, 167 million come in, and Solana and XRP. So we can see these, and here we can see the percentages as well. Like majority being Bitcoin, then that's the green area. The blue area is Ethereum, and then the other two, they're just tiny. You can hardly see them, XRP and Solana. Okay, but if we want to look at, let's look at the Bitcoin ETF. Bring in US dollars. So look at that over the past couple of weeks. Okay, so from the 13th, 1, 2, 3. So this is last week. So we had 1 day of negative, and then 1, 2, 3, 4 days positive. 6, 1, 1, so almost like $1 billion. This week we had 4 days all positive: 200 million, 11, 300, 200. Okay, so 3, 5, 7, about $800 million flown into Bitcoin just in this week. Okay, so that is while the miners are also selling. Okay, and from the other, so let's have a very quick look at Ethereum. Ethereum is slightly weaker in terms of, there are some inflows, and so we had inflows as well, but this week is, like yesterday, there is a negative amount, and so this week has been pretty, not, it's still inflows, 100, 200, about 120 million, several orders of magnitude less than Bitcoin, but that's to be expected. Solana, again, a little bit of money coming in this week, about 10 million in Solana, and XRP, 2, 4, 6, about 6 million coming in this week. So the numbers of the other ETFs are still pretty small compared to Bitcoin and Ethereum, but it's still good to see the trend. Okay, good to see the trend. Even in here, you can see now that over the past couple of weeks is mostly green, even if it's small numbers. But again, the momentum, it's created bit by bit with with extra inflows. And if you look at Bitcoin and on-chain data, why did it kick me out? Sorry, just a minute. One again, please. Okay, if we look at the realized price, it now started climbing back up. So this is the average of the last time that any Bitcoin, so we can track any bit of Bitcoin that is being traded. So this is the average of the last time any of the Bitcoin in circulation have been moved. So it's an average of the coins that have never moved since 2009, like the Satoshi coins, for example, to the coins that were traded yesterday. Okay, so the average, it's this blue line here. And I think it's important because it's pretty much, so if we go to the other side of that line, price goes to the other side of that line, it means that the majority, the average of Bitcoin holders will be holding Bitcoin at a loss. Okay, so at the moment, as you can see, the price is still above that point. So the average is at 54.2. It means that the average Bitcoin holder is holding Bitcoin at a gain. Okay, and in history, generally when we hit the bottom of one market cycle, like in 2022, in 2018, and so on, it's always been within a certain percentage of this average. Okay, so generally between 10 to 15%, up to about 20% of this line. So if it's standing now at 54.2, add 10% would be an extra 10,000, which already takes us at the 60,000 that we touched in February. So we could possibly already have hit this cycle's bottom, or there might be another move down. So we don't know yet, but we're not that far away. So I'm looking at anything between, I would say, 60 and 40 to represent the bottom of this cycle. This is what my expectation would be. And in terms of net unrealized profit and loss, NUPU, so as is written, we are now climbing back into more interesting parts. So this goes from basically zero, so from 0 to 100%. Okay, so it goes from 0.1 to 1. And in the past, the points that have represented the top of the markets have been near the 70% mark. So a level of 0.7 or above, it's when we get into what that greed or euphoria phase, when the market, people realize that the Bitcoin is overpriced, and then there is like the beginning of the bear market. So we have gone nowhere near that level during this cycle. We've got a maximum to about 1.6. So there's still plenty of room. At the moment, we're standing about 0.3. So there's plenty of room on the outside to go, where we have actually gone quite low down, at 0.1, sorry, 0.2 there was in February, which is quite a low value for this stage of the cycle. So let's go and have a look at a few bits of news. So we already looked at the miners. This is another interesting bit of information. This is ARK Invest. They're tracking the percentage of Bitcoins held by what is called conviction buyers. Okay, so that has gone from 2.1 million to 3.6 million during the first quarter of 2026. So there is a lot of accumulation, and people, they are aggressively buying Bitcoin because they think the price is going to go up. Okay, so even while the price was coming down, because in the first quarter, look at this data. So if we go to where is the first quarter? Okay, so this is where it starts, and this is where we are right now. So even now that the prices are going back up, where are we? Oops, sorry, wrong instrument. We're still sitting right now at an 11% drop at the moment. Actually, if you're looking at the first quarter, I should really be doing this to the end of March. Okay, so at the end of the first quarter, we had a 22% drop in Bitcoin price. Okay, while at the same time there was like accumulation from conviction buyers. Okay, so just as strong-handed buyers viewed the drawdown as an opportunity, not a reason to de-risk. So they were not selling onto the price drop; they were buying onto the price, on the price drop. So interesting. Now, a series of kind of news to show you how the work in cryptocurrency is going ahead. In the sense that all these things like creating a euro stablecoin. I mean, there is already the equivalent of the USDT, which is the EURT, but it's fairly limited, very, very small. At the moment, 99% of the global stablecoin market is denominated in dollars. Okay, so there is now this initiative by 12 European banks of creating a European stablecoin that can be used for cross-border transfers. So these are some of the banks, the BBVA, BNP, Danske Bank, etc., ING. So the big UniCredit, the big banks, some of the top banks in Europe, they are creating this stablecoin using Fireblocks. Now, Fireblocks is the company that is behind WorldPay, Revolut, Galaxy, and so on. So it is a serious project. And the idea is that, institutionally, they want to build an institutional grade stablecoin that can be used in Europe instead of having to rely on the US dollar. So again, move away from the US dollar. That needs steps like this to actually become a reality. So this is expected to come into fruition in a few months' time. So we might see then that potentially the opportunity to move funds without having to use the US dollar very, very soon. Okay, now again, let's see how crypto is creeping into like traditional businesses. Now, this is a burger company that is now, they unveiled a Bitcoin bonus program for employers. Okay, so like Steak and Shake offering more than 10,000 of its employees, which are kind of low-level employees, the possibility of being rewarded with Bitcoin. So there is like this recognition that is something that people value. Otherwise, they wouldn't be doing this. So they're all little crumbs, little pieces of the puzzle that we are seeing to make Bitcoin part of everyday life. On here, so big boys, what has been the big talking point now about going through parliaments in the US is about stablecoins, the Stablecoin Act, the Genius Act. So there are now many billions of dollars now they are represented in by stablecoins. The stablecoins providers need to deposit their dollars in invest them basically in yield producing assets like like treasury bonds. And now Morgan Stanley it's launched this stablecoin reserve portfolio. So basically a government money market fund for stablecoin issuers to park their reserves, while the coins are being used digitally. The dollars that underpin those coins will be then potentially being managed by Morgan Stanley. So you can see now that big businesses are finding way of making money out of crypto. And once that is embedded into the system, then there is no way back, guys. So stable coins are here to stay. Crypto is here to stay because it's become now an institutional asset that even big players are engaging in and making money from. And that's been the biggest the biggest obstacle so far is that they didn't know how to make money in crypto 2 or 3 years ago. Now they do. Couple of things about Cardano. Now, Cardano and Masumi are now officially part of the X402 framework pioneered by Coinbase. Okay, and this is the second part I wanted to share with you. Making 402 on Cardano, so this standard, because it's embedded in Cardano, more powerful than most chains. We support for identity, refunds, dispute decisions, login, registry, and more. So these things are Cardano qualities. So I just wanted to show you. So this is Coinbase. That after many years of opposing Cardano, they now are come on to dealing with it. But really, the technology that Cardano has taken so many years to develop could potentially, it's so superior to most of the other blockchains that they could end up running most of the other blockchains inside of Cardano. And this is like, I know it's mind-blowing, but basically Cardano could run Ethereum, could run Bitcoin, could run most of the other chains because they have the infrastructure that takes years to develop. And it's been like a concept position. Like Ethereum, for example, has gone to market first. So they've gone to market, they've done the Silicon Valley strategy. Just throw stuff at the wall, see if it sticks or not. And that's the strategy they do in Silicon Valley. Just put products out there and try and break them, and then learn from what happens. Cardano instead is taking the other approach. It's taken the institutional, what you call the scientific approach of building something that it's solid from the get-go, from day one. So they've taken a lot longer to come to market, but now that they are there with the full stack of technology in place, which is still being developed, but it's got a solidity that they can be rivaled by any of the other chains. It's difficult to apply the same things to other chain while they are already developed, and there are so many problems already, like we have found out in the recent Kelp DAO hack that you may have read about in the news, and we're going to look at that in a second. That couldn't have happened with Cardano technology underpinning that. As simple as that. So it is a fundamental flaw of Ethereum, and a lot of Ethereum, both the layer 1 and layer 2 Ethereum projects, that is allowing that sort of hack. So going forward, when you think about, yes, crypto is great, but once you're starting to get banks onboarding onto crypto, financial companies onboarding onto crypto, major companies using crypto as part of the way they run their company, they wouldn't be able to use the technology where there is a 10% chance of all their funds, all the secrets being stolen. So they just wouldn't go for something like this. And this is the big difference of, okay, which technology is going to be the winner long term, and this is the work that Cardano is doing. Another news about Cardano here, this Charles Hoskinson that was talking about Filecoin, and which now is available as a new premium storage tier for Cardano developers. So again, as you can say, is having the technology to then onboard other providers that are doing good work, like Filecoin. It's like a win-win situation both for Cardano and Filecoin. So lots of things to think about. And where do I have there? So this is the other thing I was talking about, the Kelp DAO attack, which happened about a week ago. Okay, on the 18th of April. which has been the largest exploit in decentralized finance of 2026, with a theft of around 292 million or 116,000 Ethereum RS-ETH. Now, first of all, what is RS-ETH? It's a type of liquid token. So in Ethereum, and this is like it's native directly on the main on the Cardano ecosystem, so you can do it without any of these system I'm going to describe in a second. You can do it from the safety on your own wallet. Everything it's a liquid token in Cardano. But in Ethereum, you can deposit your tokens in something like Lido to get staking rewards, and you can then have take out the same tokens in a new token that represents your staked token ownership. You can then use these tokens, like this one, for example, to participate in DeFi. Okay, so that is the structure. So you can basically use your tokens in two places at once. So you can still get your staking rewards, but at the same time you can use your tokens in DeFi as well for lending, borrowing, or other operations. Now, this problem came with the layered zero powered bridge that Kelp DAO uses to transfer these tokens across blockchains. Now, the problem is that they had a single point of failure. So they had a decentralized verifier network. They meant you need only a signature, a single validated signature to approve cross-chain transfer. Now, security researchers had pointed that out before, saying as a vulnerability, as as early as January 2025, and proposed to upgrade to a multi-signature setup, like 2 or 3 signatures. But the protocol had prioritized transaction speed over security. Okay, that again, just think about it. This is things that you might be using for your transactions. Now, do you want to take that risk? And 99 times over 100, everything works perfectly well. What about the 100th time? So apparently, this is like the North Korea Lazarus group that was involved into this assault. They compromised the infrastructure, and they launched a distributed denial service attack, and so that the system would rely only on the compromised data. So without going into too much detail, not only they stole these tokens, but then that caused a market contagion, because the tokens that are stolen, they were deposited then on Aave, which is against DeFi protocol, and they use that deposit to borrow as a collateral to borrow funds. Okay, so this left Aave with nearly 180 million in bad debt. So they have realized that this was going on pretty quickly, within 46 minutes of the first incident, and they managed to stop the hackers for stealing another 200 million, but still they weren't able to block the whole thing. So they managed to freeze about 30,000 Ethereum, which are about 70 to 90 million of the stolen funds, from downloading and moving off these layer 2 networks. But there are problems even in that, because I'm thinking, well, this is supposed to be decentralized. So the fact that funds can be frozen, although it's like a good event in this case, do we want to have that oversight? So is it completely decentralized or not? And it causes actually more problems than it solves. So lots of good news this week, and some worrying news that should also make you think about what is important in a crypto crypto protocol, crypto decentralized finance. And this is very relevant because, guys, we're talking about now what we're doing in AIW as well at the moment, with the cash flow codes. It is often playing in DeFi. Okay, so this is particularly relevant. So I just wanted to bring it to your attention. Okay, so I think I've shown you everything that I wanted to show you today. So let's stop sharing and let's have a chat. Let's see if anybody has questions. And guys, I know that some of these things we've gone fairly in depth, but questions can be anything. There's never any silly question. So if you're a complete beginner's question, just feel free. But obviously related to crypto, I'm not answering existential questions. What's the meaning of life? That's for another thing, for another hour.
The meaning of life is an after dinner mint. I put a question in the chat for you to ponder.
Question in the chat. Yeah, so I mean, you're talking about, so David, this is for those of you that know, what's your opinion on the fact that the uptrend is on the back of lower volume? Miners are selling where strategies are buying. So yes, strategy is a buyer and it's been a buyer of Bitcoin for yonks now. But it doesn't mean that the price climb is down to strategies purchases, because there have been many days where strategy has deployed big purchases and the price has still gone down. It's what I think is more interesting is to see what the whales are doing. So the big holders of Bitcoin, which obviously MicroStrategy being probably one of the largest, and I think it's in a couple of years continuing like this, they probably become the biggest holder of Bitcoin. But there is a lot more than MicroStrategy to Bitcoin. What I think is particularly interesting is to see the Bitcoin price has climbed with conviction buyers going up during a period where miners have been selling. So even on the strength of that, the price still had enough of momentum to start turning around, which is more significant. And this is while retail really hasn't come back yet. So that, for me, that is interesting, a very interesting point to notice. So in a way, it's reassuring more than anything else. Now, obviously, retail always comes back when almost after the fact. And I always told everybody, a couple of years ago, when we went 2022, and we were having the same discussions as now, I told everybody, look, price of Bitcoin now is what, 16, 17,000. There'd be more people buying it at 60 than are buying it at 15. And that was completely true. At 60, when Bitcoin got to about 60,000, there was like a frenzy, a feeding frenzy, because, oh, look, this is the asset that we should be in. At 16,000, nobody was touching it. Why is that? Why is that? So this, for me, from the point of view that the way I look at things is that the first move always comes from people in the know, and people there got enough clout to be able to turn around a $2 trillion market. Now, your investment, whether it's 50,000, 100,000, 1 million, whatever, you put all your super on Bitcoin, it won't even change, it won't even move it by $1. It's such a big market. So to turn around, you need serious capitals. Okay, so to have already what happened in March with Bitcoin going up about, what was that, about $10,000 in 1 month, there or thereabouts, you need serious money behind it for that to be happening. Okay, eventually people realize after a while, after they look at it, oh, look at this thing is, after it's happened for 2 or 3 months, this thing is going up by 10% a month, better buy some. And that's when the volume comes back in. But at the beginning, the best opportunities, the best time to buy are always, when you look at the extremes, they're always low volume environments. Okay, so that doesn't worry me. Doesn't worry me as long as we don't see the volume appearing on the other side. So yeah, David, when I say volume lower because retail hasn't come back yet, so it's uncertainty that feeds the low volume, because if people see that there's money to be made, money can be made on either side, on buying or selling. So as long as there's momentum on the way up or on the way down, people are happy to put their money behind it. When there is sideways momentum, so people don't know what's happening with the price, is it going to go up or is it going down? Then they keep the money in their pocket. So it's once it's clear that there is momentum either on one side or the other, then people back it with their money, because they want to, because greed takes over and they want to make more. Okay. Get some more question, please. Anybody would like to ask anything? No?
Hey,
Oh,
Luca,
okay.
it's Kay. It's
Kay.
seriously basic, and I could probably Google it, but what's a miner in
Oh,
this
miner.
context?
Okay, so the Bitcoin network is supported by thousands and thousands of different computers. Okay, that put their computing power to support the network. Now, the way they do it is that they kind of like what they call the miners, are the people that put their computer towards that. At the moment, is mainly for really big business. So there's lots of companies that do that. They're quoted on the stock exchange, and what they do, they compete to solve a sort of like cryptographic puzzle. And the first computer to solve the puzzles gets the right to create the next block. Block is a block of, this is why it's called a blockchain, because it is a chain of blocks. A block is what contains information. So information can be pictures, can be data, can be numbers, can be transactions, but can also be many other things. Can be code, and it's all inside a block that is created roughly in Bitcoin once every 10 minutes. So the winner of this competition gets the right to create the block, and then as a reward, there is a reward of, at the moment, 3.25 Bitcoin per block, plus they take all the fees or the transactions that are included in the block. So 3.25 Bitcoin is at $75,000 each, is $250,000 pretty much, give or take. So and that happens every 10 minutes. So miners are all companies that pull together lots of computers trying to win the next block. And on average, they win some, they lose some, or whatever. But if you pull, a lot of computers together, then there is a higher chance that you will get to create the next block and get the reward that you can share between all the computers that are taking part. So these are what the miners are. At the moment, I say most of the miners are big companies. You might have heard about Marathon, for example, Riot Blockchains they were talking about. So these are companies that are quoted on the Nasdaq.
So is that kind of like being their own coin mint, as it were? No.
Coin mint. No, so they don't mint their own coins. This is all the Bitcoin code. The Bitcoin code is built so that there is like a new block of being added onto the blockchain every 10 minutes, and then the first to solve this puzzle, so to speak, it's the computer that gets the right to create the next block. Okay. And so this process goes on from the beginning of Bitcoin to the current day. You can go and read the information in all the Bitcoins that are being created, from the last one to the one that was created 10 years ago. It's all public information, and is all linked, really chain by chain. So there's in a certain progression. Okay, so those things, 3.25 Bitcoin come into existence every time a new block is created. Okay, and that goes to the person, the computer that gets to create the block. And then they obviously get into circulation. And that way, if you go, and then every 4 years, that reward, those 3.25 Bitcoin at the moment, gets halved. So in 2 years' time, which in the next halving event, the miners will not receive 3.25 Bitcoin per block. They will receive 1.6625, whatever it is, per block, and so on. And then if you take all the way to the end, that gives us a total of 21 million coin that will be reached sometime next century.
Okay. So it's a definitive pool of money.
It's a definitive, yeah. And then when that happens, when the last Bitcoin is minted, then the miners will only receive the transaction fees out of each block. They will not receive a Bitcoin reward as such, out of the protocol, but they will receive just the transaction fees of the transaction that are included in the block. Did I cover it right, Jonathan? I was trying to say Jonathan is the expert, so if you really if you want a scientific answer, then you'll ask him.
That's good enough for me, thank you.
Don't bringing me into it. Just confuse everyone. But I did note that we do call it, like when we say we're minting coins in the Royal Mint, like there's new pound coins being created, then it's a bit like that, and that's where the term comes from. I think minting a block here.
Yeah.
But it's kind of more like the treasury almost. We've got the rate of production of new coins being set by this mathematic formula. So it can't be, when there's a disaster, we can't print a whole load of new Bitcoin. The rate is produced at exactly the same all the time.
Thank you.
Mm-hmm.
Okay, so that's another asset, by the way, that is possible to invest in from your super. Is a Bitcoin miner. Just to confuse you a little bit more. So you could buy the Bitcoin ETFs, like IBIT that we've been talking about, but you can also buy shares of Bitcoin miners. And there are even Bitcoin miner ETFs. By the way, you can buy them, single company's shares, or you can buy an ETF that invests in all different shares of Bitcoin miners. So that's the same way that you can buy gold shares or a gold ETF, or you can buy a gold miners ETF. Okay, with companies that go and mine gold.
But won't the AI bots replace the computers?
Sorry, which one?
Maybe the AI technology will replace the computers, like either quantum computing or AI must be able to solve the blockchain puzzles quite easily, I would think.
Well, there's now work going on to make chains quantum resistant as well. So by the time that technology is widely available, then
I'll be dead.
No. I think it happens sooner than that, hopefully. Hopefully. So it's quite imminent, but by then, all the serious projects will then change, their setup so that they are quantum resistant.
Wow. Okay. Wow.
Okay, guys. So we come to the end of this hour as well. So it's 10 o'clock. Now, I would highly recommend you guys to go and also listen to Jonathan. The runs a session starts shortly after this, which is Cardano. I remind everybody, for those of you that don't know it already, Jonathan is a Cardano stake pool operator, soon to be a Midnight stake pool operator too. So is equivalent K to the Bitcoin miners, so to speak. Okay. In a different chain because it's a slightly different system. Bitcoin is proof of work, Cardano is proof of stake, so it works differently, but it's basically the equivalent of what a Bitcoin miner would do, but for the Cardano network. So it's interesting, like the session really does, because it shows you how it actually works in a specific blockchain ecosystem. Okay, so obviously it talks about Cardano. There are people that do similar things in other ecosystems, whether it's Solana or Ethereum or other things. But going forward, this is the way that things would be done. So it's the same way that when 20 years ago when the internet came along, you could pretty much ignore it and live your life as you were doing. Now you can't. You can't do anything without a computer, without internet. Okay, so we are at the same point now. So it's your choice if you want to learn how to do these things, or 5 years down the line, you're going to have to learn it anyway. Okay, so if you're early, sometimes there is an advantage of being early into a particular new technology. You can take advantage of it, or otherwise, if you're just going to have to use it when it's commonplace. Okay, so if there's the link for those of you that want to attend the Cardano Q&A with Jonathan, it's in the chat box. So I'll just give you a few seconds to click on the link if you want to, and then I'll see you again next week. So next Friday at the same time. I remind you the two sessions. I'll do the long-term wealth before 1 hour before, and then at 8 o'clock UK, and then this one, the crypto hour, at 9 o'clock. Okay, so after that I take a little breather because I talk too much. So, have a nice weekend, everyone.